All right, now let's take all of these components of our trading strategy and put them together into a backtest so that you can see how this would play out on the charts. We're going to use the same chart now. We've got everything in place. I've got the settings done for Lux here on this particular pair. It's 1121, and all of my indicators are in place. So we'll just, I will show you a couple things before we go into replay mode, because we can't set alerts outside of replay mode or when we're in replay mode. So what the alerts that I set are when the price crosses the EMA and when the price crosses the leading edge of the equalizer. Now that would also be if you're using the 2 moving average method, then you would make sure that you're crossing that one leading edge of your homemade cloud. So we're gonna go ahead and add an alert on this one. Now, so when the price crosses the EMA on the close, make sure that it's on the close. If you do it only once or once per bar, you might be missing opportunities. So once per bar close, or false starts on opportunities. So yeah, always read things on the bar close. So we're crossing the baseline, and I would click create. I already have one created there, so I'm not gonna worry about that. But then when you go to create your Lux Algo one, where you're crossing the leading edge of your cloud, you're gonna select cloud 2. That's the leading edge. On the bar close, and then I go leading edge. And that's that alert. Now the other type of alert that can happen occurs when the volume is a little bit delayed. So you can have a crossing of the EMA. This is just a quick example. There's a crossing of the EMA, but we don't have the volume to support. So we see the crossing, then what you can do is that when you see it and you're like, okay, I don't have the volume, you can go down to the volume and add alert, and you can say when the downtrend, so this would be volume of a downtrend, crosses, select the WAE, and it crosses the explosion line on the close, I want to know about it. So I go like this, and now I say that pound USD on the 75-minute volume breakout. Now, I don't keep this one on all the time because there could be tons of breakouts that are simply not entries. But what I do is that I just go and turn it on when I need it. So let's go down where is it? Pound USD. There it is. So I just pause it. I don't actually have it playing, but when I get the notification about the line being crossed, I'll just go ahead and restart it. I'll just go ahead and restart it so that I get notified. So I don't have it running all the time. All right, so now let's just go back. Let's get rid of this here. Let's go back and do some replaying. Something. Let's just go towards, I don't know. Can't see anything here. I don't want to make it too obvious, but here's a little bit of consolidation. We'll come in after this consolidation here. Let's do it right here. Okay. So now we just move these candles forward and we'll see where our notifications would hit us. So I'm going to get a notification here because I just crossed the leading edge, but as you can see, I don't have strength in the bulls or the bears, and I don't have the volume. And I'm also working against the confirmation from Lux. So that's not an entry. Here's another crossing now of the EMA. Still don't have a volume breakout, and we're still against the confirmation from Lux. Here is a huge candle with a strong confirmation from Lux and the breakout on the volume. Whenever I see this kind of thing, like this here, this bar is the high and the low are like, that's like 900 ticks, I think. Yeah, it's like 913 ticks. So that, if we mouse over top of that, that is over 3 times what our ATR is, and yeah, really high. So we're not interested even, yeah, almost 4 times the ATR on the bar before. And so because that's such a huge bar, I tend to say that that might have something to do with the news that's there, or it could be that this is just a market imbalance. And so whatever the case is, we're not entering on this because market imbalances like that are simply not nice to trade. And so we wait for the next opportunity. There's usually a little bit of consolidation after that kind of thing. Oh, we've got a crossing there. We've got strength in the bears, but we don't have the volume. And we're also against the Lux confirmation of a strong trend upwards. So we wait for the next crossing, which is right here. We don't have strength in the bulls or the bears, and we don't have the volume. And here's another crossing, but we're still inside the strong confirmation going up. There are instances where you can go against a strong confirmation. That would be like if the price action closes below where the strong began. That can be something where you don't have to worry about trading against the trend. But we're clearly not there. So we move onwards. Okay, here's another big, huge bar. Yeah, so this is the correction to the market imbalance, probably going right back where we would have been prior to all of this. So that occurs sometimes. We do not enter on those. Even though that it may produce an opportunity, now we're just about a strong confirmation. Yeah, so that would have been an opportunity because now we're into a strong. But you know, I don't. This crossing here, no, one might take that, but probably not, because there's still strength in the bulls on that bar that crosses the leading edge of the equalizer. And I also don't take the first trade against the trend. So this equalizer is telling us that we are in a bullish trend. I don't take the first one. I need to see a retest. So this might be the retest here, where it crosses above the EMA. We would get alerted, but we can see that the volume is not in our favor. So we wait, and now we're in just a buy here. As you can see, that buy is present. We've got the strength in the bulls, but we don't have the volume, so that's not a good, and that's not our good timing. Next, we've got another crossing right after that. Now it's turned into a strong, but we don't have the strength, and that volume is still too low for us. So we wait. There's a crossing going downwards. We have strength in the bears, but we do not have the volume, and so we are not taking it. Here's a crossing above. The volume has gone up, but it's not breaking out. And so there we go. Okay, so there's an example actually on that closing. Let's just go back one candle. On that closing, we would get notified, but we don't have the volume, and so that's where I would switch on the notification to let me know if that volume breaks out above the breakout line. And so then we wait, and then the alert would occur here saying, great, there's my volume. I've got strength in the bulls, and I've got a strong confirmation from Lux now. So that's just a great recipe. So we're gonna go ahead and open a trade. 228 is our ATR. So that means we gotta go 228 plus 50% plus our 15 tick spread. That's 357. So we're gonna go ahead and put in 357. And we have to double that because our risk to reward ratio is going to be 2 to 1. And so that's going to be 714. And we'll see where this takes us. Good so far. We haven't even crossed the EMA, which could be an indication to close, but we don't see it. It goes up, and there's our take profit 1. So one of our trades took profit there. Let's go ahead and mark that down. And that profit would be 3% because remember, we are risking half on each of these two trades. So 1.5% risk with a reward of 2 to 1. That's going to be 3% profit on take profit 1. And then we see what happens with the second trade. Continues. I don't believe this would be too much of a drawdown. Nope. And then go up a little bit more. I don't believe that that's a drawdown. We're looking for 357 from the top. We'd still be in the market at this point, and that definitely would take us out. Yep, 357. So we go ahead and we're gonna extend. Whoopsies. We're gonna extend this up to the top. I know that we didn't catch the top. It's not like we closed at the top. I don't believe I've ever seen that happen. But the reason why I'm doing this is because it's easier math. So as you can see, we've got a risk of 357. Well, this whole movement has a ratio of 3.27, but we can take 1 unit off because our trailing stop equals the stop loss area. So this would actually be 2.27. So we take our ratio tool, 2.27, and we multiply that by the risk that we put in of that 1%, so our 1.5%. So that becomes a 3.405, we'll just say 3.4, and we add that to here. On take profit 2, which is our trailing stop. So now we've got a 7.4% trade already right out of the gate. And we'll see what happens next. We've got a sell confirmation from Lux now. But we need to see an actual cross because this crossing here just didn't have the volume. Yeah, we didn't have the volume there, so we're not taking that trade. There's a crossing there against the sell. I don't mind taking trades against a regular confirmation from Lux. I don't mind, but I don't have the volume, so we just leave it alone. Crossed again, still volume too low. You could put an alert saying, let me know when the volume is good, but I'm not. And the reason why is because I don't even have strength in the bears right now. I would need to have strength in the bears to let me know that this is a good time to enter. And there's another crossing. There is volume, but I don't believe it's broken out. Nope, it is not broken out. And we still don't have strength in the bears. So we move forward, still no strength. Okay, we've got a pop up here, going above, but strength is in the bulls, but we don't have the volume. And here's going downwards, and we've got the breakout. However, we still have strength in the bulls, and it's higher than the strength in the bears. So I'm not going to be entering the market here. Also, we can see we've got a couple red news coming up. So yeah, we're probably not going to be entering the market here for a bit. There it goes down. We might be missing this opportunity. Oh, nope, that probably would have taken us out. If we would have entered here, yeah, because there is still strength in the bears, or the bulls. And so, yeah, that definitely would have taken us out. And we wouldn't have been able to, probably would have lost 3% on that one. And this bar also, it's probably because of this news. We've got another one coming up right away. This is what, yeah, non-farm payroll. So probably not even going to be looking at entering on this either. There it is. Yep, and that's just a big bar from the news. It's not necessarily a good entry at all. And we just continue forward, we can see it's already coming back down again. That would be a loss right away, I believe. 307, no, it would still be in the market, but I mean, that drawdown is not acceptable there. That would have taken us out. So we have a crossing below, but we're still inside a strong confirmation from Lux going up. So we're not going to enter the market. We're looking for, there's another crossing, I think. Closes, barely, just closes above, but we don't have the volume. So this is not an entry. Now we're going downwards. Okay, so here is the example where we are in a strong confirmation and the bar is still strong confirmation going up, but we close below the point of entry, or rather we close below where the strong began. And so this is an instance where we can take a trade. I just want to double check the ATR is not being blown out. So high versus low. That's not bad. It's not 2.5. Yeah, no, it's okay. It's not 2.5 times larger than our ATR. So our ATR is 350 or 330, and that is not too large. So we can enter. So we would just pop open a trade there, and 330. And we plus the 50% plus our spread, that's 510. And obviously on the upside of that, so our take profit has to be 2 times. So that's gonna be to 1020. And there we have it. Let's see how this trade plays out. We've actually also crossed below the leading edge of the equalizer as well. And I don't mind in this instance, yeah, I technically don't mind in this instance going against that because we have a new high right here. I know that doesn't look like a high, but it actually is. We went down and came up, and this pin actually has 2 bars to the right or to the left that are lower. So that is a new high, which would be our retest of the EMA. Coming back down again, that's another little confirmation that we have a downward trend. So we are good to go. We're a little bit of drawdown right now, but it's coming back now in a strong. Ooh, there was a strong. Now it's back to normal. Sell, and I'm just watching. We've got strength in the bear in the bulls, and we have crossed above, I believe. Yeah, we have crossed above the EMA, but this volume is still showing us that we're in the clear. So we're going to maintain our course here, and now we've got the strong coming back, and there we are. There, that's nice. That's really nice, and we'll see that probably see 510. Yep. So that would have stopped us out with a trailing stop. So again, we take this trade down to the bottom there. And we count it out, see what we would have got. Obviously the 3% on the first trade, because that's our take profit 1. And then the next one, we have a ratio of 4.1, which would turn into 3.1. So 3.1, and we multiply that by the risk, and we have 465. I'm just going to go 4.6% on TP2 because that's our trailing stop. So there we go. There are a couple of trades being executed. Obviously, check out more videos, ask lots of questions, but this is just gives you that primer on what kind of conditions we need to see in place with all of our indicators so that we can enter the market confidently. Yeah, there are times where we lose, there are times where we miss opportunities, and that's okay. That's part of the mindset development that we have to work on. But that is it. Thank you so much. I'm really excited to see people's results and tell me lots of stories. I'm really excited. So take care, and until next time.